I'm sure a lot of people are going to know who you are. For me, the interesting part about you is how you were so quick to kind of capture the idea of Bitcoin.
Hmm.
And I think it comes from your background because you studied economics and you have a degree in accounting. It's interesting to me how you caught it so quick. So yeah, if you could just go into your background and how that little spark kind of
Yeah.
caught your eye.
So I stumbled into Austrian economics and in high school, and it got me really interested in this question of the business cycle. So why is it that the economy has booms and busts, and tracing that back to the money and the monetary system. And so back then I was really like, okay, we need to have like a gold and silver monetary system. And in parallel to that, I also got interested in free and open source software. So into Linux, installing Linux on computers, command line stuff, learning how to like compile things, and
Yeah.
listening to Richard Stallman lectures about users' rights. Um, but those two things didn't really intersect until I heard about Bitcoin. And so I think that's why that spark was there, is that you had lots of dry wood with fuel already poured onto it, and so just lighting the match you know got me down the rabbit hole very quickly. And that I would also, as I was learning about Bitcoin, I would read other people's opinions that uh, they'd be bullish on Bitcoin, right? But it seemed like they were bullish on it for the wrong reasons, and so I always felt like a need to express my perspective on why we should be bullish on Bitcoin, which I think turned out to be correct, of course, but also just to be different than how a lot of other people were thinking about it.
So in 2013, I think you said that that you kind of fell into it, or was it 2012?
At the end of 2012, and I mentioned it in a blog post I wrote at, I think, November or December 2012. But I really became obsessed with it. Do you remember there was a Cyprus banking crisis in like April of 2013?
Yeah.
So there, and it's funny how much like as Bitcoiners we hype things up. So back then it was like Cyprus is experiencing hyper Bitcoinization. Everybody on that island is going to be using Bitcoin because their banking
Yeah.
system is collapsing. Um, which I like the thought of it. Didn't pan out in reality, just like a lot of other little
Yeah.
hype cycles in Bitcoin. But yeah, it was a great moment in history.
Were you were your parents at all kind of like an influence in how you think currently or getting you into the economic side of it? Or was just living in France itself, the environment or the culture in France conductive for you
Yeah.
in that sense?
So I have memories of dinner table conversations because we moved back and forth between the United States and France and Scotland along the way too. And so
Wow. Okay.
um, there would be dinner table conversations about exchange rates because like my dad would be getting paid in dollars and we needed euros, and so there was like, oh, is the dollar strengthening or is it weakening? And so um, and then also that the banks were charging fees and that it was expensive what they were doing. There was those kinds of conversations where I think that maybe to me it got me used to the idea that you don't just have one currency and that's the end of the story. All right, the currencies compete against each other, and there's exchange rates, and then lots of questions about what's driving those. Why is that happening? So I think that was formative. On top of also just seeing the comparative political economy between France and the United States, and especially here in Texas, it's like the ideology of here they talk about like the free enterprise system and making markets work, and in France it's like we have to regulate greed because they're so um, the contrast I think did motivate me to think about economics a lot for that reason too.
Yeah, it sounds like you were thinking about it at a very young age.
Yeah.
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 So were you? so you were thinking about it, but when did you actually start studying the difference between Austrian economics and Keynesian economics?
Yeah, so my the summer before my junior year of high school, I was on Wikipedia for whatever reason, and on the homepage they had a featured article about anarcho-capitalism. And as a
Really?
high schooler, I was like, well, that sounds really provocative and edgy. Let me click on that
Yeah.
link. And I read it top to bottom, and it's all very logical. And so I was instantly hooked. Ended up on Mises.org and signed up for their newsletter. Just started reading as much as I could from that website, and it was Austrian economics. Also, went to the library, found a French translation of Human Action, and bought a copy of that and read it, cover to cover. Also got interested in Ayn Rand's ideas and objectivism, and read Atlas Shrugged, and the um, the Mises Institute would also post MP3 files of recorded lectures. And so
Okay.
I was very early podcast enjoyer on my iPod. This
Yeah, I
is before
remember that.
iPhones existed. I
I
had
remember.
a Motorola flip phone, or no, even no. Back then, I didn't even have that. I had like a
Was it the
Nokia.
Nokia, the little with
Yeah,
the little keypad?
right. And my iPod, and it must have been like 2 gigabytes or something. But loaded it up with Mises Institute MP3s. So then in my junior
So how?
year,
So you were still in? Oh, so you were like a sophomore then when that happened, when you
yeah.
were
So that
studying
that
this.
was that was from like the summer before junior year into junior year, and that year I took an economics course in school, and it was really interesting because my economics teacher, she was not Austrian by any means, but she thought it was really interesting that she had a student who was passionate about economics.
Yeah,
Regardless of whether we agreed about, the politics of it, to her it was unusual that like a student would be nerding out on schoolwork,
yeah.
um, and arguing with
Especially
her.
economics,
Yeah.
especially
Uh,
economics at that age.
Expected that. And, I remember her saying things like, oh, we're going to talk about Hayek tomorrow. Pierre's going to be happy, so it's like, um, it was a situation where, despite disagreeing, she wasn't like insulting me or saying that I was, stupid or something. Um, but it did cause cognitive dissonance for me of, why is it that they're teaching something that's wrong in school? And that, shouldn't school always be teaching people like the truth and what's like, reality?
Right.
And it caused some self doubt at one point of like, am I going down the wrong intellectual path and that I'm missing something here that, um, but it came out of that trial and tribulation, with greater conviction of, no, there are different ways of thinking about things, but I think the way the Austrians are approaching it is objectively correct.
Do you have so there may be some people who aren't too familiar with the difference between Austrian economics and Keynesian economics.
Yeah.
Do you have kind of like an elevator pitch for
Yeah.
either or both?
Yeah. So first, I'd start with neoclassical economics, which is really saying we're going to model the world using assumptions like we're going to assume perfect competition and perfect information, and kind of draw out intuitions about equilibria that are quantitative in nature, and then we can use econometrics to try to reconcile between models and the real world. Um, the Keynesians are, so the neoclassical, typically I think that they're at their best when they're doing like microeconomics, but it's all like very uh, it's so hard to measure the real world that it's almost like you can torture the statistics to say whatever you want, right? And there's
Absolutely. It
very
happens.
few really pure experiments that you can run that would be empirical in nature. Um, so sometimes they just fall into historicism of just they're historians. They just write about economic history. The Keynesians are really interested in macroeconomic aggregates. So saying, okay, here's like total demand in the economy, and here's the total government spending, and how does that feed into GDP? And they also view um, the circulation of money very differently. So they look at it of basically that if you're just holding money, then it is idle and you're slowing down the economy because you should be spending to generate economic growth, is kind
Yeah.
of the basic Keynesian presupposition. The Austrians, rather than looking at it from a theoretical quantitative lens or a top down macro lens, they look at it from a so they start with really from a philosophical perspective that is Kantian in nature. If you kind of go down to the layer zero of Austrian economics, it's Kantian. Uh, it's rooted in Kantian epistemology. Um, and going then onto the layer one of Austrian economics, what you have is praxeology. So saying, okay, humans act, they have ends and they have means, and they're trying to match up means to the ends. And this is a imperfect entrepreneurial activity because of how complex and uncertain the outside world is. And so it starts with individualism and subjectivism, and that we can derive some axiomatic views on value, on the emergence of money, and capital accumulation, and then what causes the business cycle from there of talking about the structure of production and interest rates, and so it's very different at its core from a methodological perspective. So I'd say that Keynesians and neoclassical are far more quantitative and empiricist, and Austrians are far more qualitative and almost philosophical.
So for people like me that came from a more business side that kind of respect, kind of no, I mean, I definitely do respect Warren Buffett. How would you approach somebody that's heavy into business, heavily respects Charlie Munger, Warren Buffett? What do you think is the best way to kind of speak to those people and kind of let them see the light?
Yeah, so I did also get interested in like value investing type thinking. So I read like Benjamin Graham's or yeah, I
Yeah,
think that's
Benjamin
his
Graham.
name. Yeah, book
Security
about
analysis,
yeah, exactly.
the Bible, it's like this thick.
Yeah, uh, I guess at some point I was like, oh, I'm going to be a stock picker.
Yeah,
But
I did the same thing.
I found it very interesting from an economics perspective of like, okay, I've read about all the theory in, human action. Now I want to get closer to the reality of how um, practitioners think about investments. And also really enjoyed reading Seth Klarman, Margin of Safety.
Yeah,
Um, and
that's
to
a hard
them,
book to get.
I think two things are true. One is that it's very hard to think outside the matrix if you're that deep in the matrix, right? So, like, Warren Buffett has been very successful in his career because he has embraced that, hey, it's a Keynesian world and we're living in it, and how to adapt to that and have an investment approach that is is flexible and works in an inflationary environment. And I
Yeah.
think equities actually do really well, broadly speaking, despite inflation, because of their nature, right? Which is that they're not like fixed income where you get destroyed by inflation.
Yeah.
Um, with some caveats, right? So I think like the '60s inflation, stagflation is bad, or the '70s, sorry, the '70s inflation. Um, but if we look at the period of 1980 to 0% interest rates in 2008, um, that's a situation where you're starting with a very high discount rate, and the discount rate is going from 20% to 0%
Yeah.
over that 35 years. And so you can actually have a really nice track record of investing in equities
Yeah.
with that tailwind. And if you're conservative, then you don't get wiped out when there's a crash, um, and that you just need just enough cash laying around to be able to be opportunistic in those situations. And so I think that Warren Buffett and and really the wider universe of investors have become very acclimated and comfortable with the existing monetary framework that underpins their investment strategies. And so then when you bring along Bitcoin, which is radically different, right? Hyper
Absolutely. Yeah.
deflationary, uh, extremely volatile, doesn't have any cash flows. So it's not a business, it's a new monetary asset,
Right.
and it's not tangible, it's not gold. And I think that Buffett would admit that he was late to the Mag 7 of, like Apple, for example, of because the digital economy probably was discounted by the dot-com bubble, right? So seeing all of these people get burnt in the dot-com bubble, it's like, okay, well, tech is very, you know,
Yeah.
it's not it's overpriced, it's growth, it's not value, and that it's not investable. And so with Bitcoin, it is tech, it's digital, it's uh, not tangible, and so you have to have some cross disciplinary understanding of cryptography, monetary economics, open source, distributed networks. How are you going to underwrite the technology if you don't have those perspectives?
Yeah.
And you can't really be a value investor because like so I think if you do understand the technology, then and you're buying Bitcoin, you are a value investor in the sense that Bitcoin is undervalued at a fundamental level today, and the but it's just you need to have that perspective on it. Um, Furthermore, big picture, value investing is very hard in an inflationary environment. So just let's remove Bitcoin. Let's like rewind to 2005, let's say, okay? So, um, and even today, you could argue that stocks are overvalued, not even in Bitcoin terms, just in absolute terms.
Yeah.
And that's because nobody wants to hold cash because cash is trash. It's losing its value. It's a melting ice cube. And so investors are incentivized to deploy their capital as quickly as possible, regardless of the underlying quality of the investments that they're making. And that is antithetical to value investing. You have to be very patient and sit on cash to be a value investor and to wait for those opportunities where you can deploy capital with a margin of safety.
Yeah.
Um, I think that because Bitcoin raises the hurdle rate of investments, that now if you look at Bitcoin's CAGR long-term CAGR, and you say, okay, well, the hurdle rate is now between 30 and 60% annualized return, and any kind of investment that does not clear that hurdle rate is obviously inferior to Bitcoin, then you can hold Bitcoin and now you can be a real value investor because now you're going to wait for real opportunities and your capital, your long term cash is what I would call it, is not being diluted and debased by the central bank. And so I think that it offers a revival of real value investing for folks like Warren Buffett. It's just it's so foreign to them that they've had to essentially compromise their views on value investing, right? And uh, but only relative to where Benjamin Graham was, not relative to the rest of the market, right? To relative to the rest of the market, they certainly are value investors.
Yeah.
So I don't. Does that answer or does that speak to
It
you?
does. It definitely does. It's just funny because having heard, I mean, I don't even know how many hours of his Berkshire Hathaway meetings and whatnot. You would always have a gold bug that would show up and ask him about gold, and he's like, "Oh, it's it's you have a 33 by 33. I forgot what the number is. A cube that's 33 feet tall, 33 33 cubed." He goes, "But what are you going to do with it? You just stare at it. You can hug it, you can caress it, but it's not going to produce cash flows." And that's their biggest thing. They're just so stuck on this cash flow. And that's why I really, one of the things that I heard from you that really stuck with me is I never read the paper, but I think there's a paper or a book or an article that you reference from Hoppe that's called
Hmm.
the yield of cash held, I believe.
Yeah, revisiting the yield on money held. Yeah.
Yeah, so I guess that would be my next question. How do you, for somebody that's so hung up in the business world about cash flows or real estate investors, that's one of the biggest arguments that I have, especially with my father-in-law. I love
Yeah.
the guy, but he's a real estate guy, and um, and he's just so stuck on dividend. So his whole thing is dividend portfolios
Hmm.
and cash flow from real estate. Those are
Yeah.
like the holy grails because everybody that he's known that's made a ton of money has that's been the path for them. And I've had several discussions back and forth, and I can understand where that comes from, especially at retirement age. You do need income. So it's a hard needle to thread. And obviously, this is not financial advice for anyone, but it's always, everybody has their own path that they have to go. But somebody that's stuck on portfolios that generate dividends for income or cash flow
Hmm.
versus that article by Hoppe, how do you how would you argue that point to somebody that's more traditional?
Yeah, so this is actually a debate that has gone on in monetary economics for centuries. And um, if we go back in England, it was called the banking school versus the currency school, and this was their debate about what is the utility of holding a monetary asset, and that then um, on one end you have those who say, well, the utility of holding a monetary asset is to spend it and to put it to work. Because if you're just holding it, it is barren and sterile and is not producing anything. All right. So, exactly the same kind of thinking, right?
Yeah.
And then on the other side, it is that the utility of holding a monetary asset is that you are hedging against future uncertainty and that you derive utility from that while you're holding it. That is actual real utility that you are realizing from holding it. It is not a cash flow, but it is a a real creation of value for the individual that is holding the money, even if the purchasing power of the money does not increase, right?
Right.
So let's just take Bitcoin out of the equation. Let's just say gold, right? That, um, or dollars for that matter, really, because one could ask, why does anyone hold dollars today? As we've pointed out, nobody should be holding dollars because they're constantly losing value, and
Right.
therefore, if nobody was holding dollars, then the value of the dollar would literally go to zero because nobody wants to hold it, right?
Yeah.
That doesn't happen because the dollar is still a monetary asset that has demand to be held as a hedge for future uncertainty. And so that's why people keep cash around. And it's why any good financial planner will say, yes, you should put your money to work, but you should also have a rainy day fund of cash for 6 months worth of expenses, let's say. And they try to minimize that number, right? They don't tell you for 6 years of expenses because they understand cash drag on your overall portfolio allocation is going to be expensive if you go further out than 6 months or a year.
Right.
So the with Bitcoin, you have first of all that baseline level of utility from holding it. You don't have the counterparty risk. You don't have all of the risks that you have with real estate. Depreciation.
Yeah.
Everything's falling apart. Demand, right? Do we have enough renters or leasing it out? So there are risks with real estate that then
Oh,
you don't have
absolutely.
with Bitcoin, and there are risks with Bitcoin that you don't have with real estate, right? And so with Bitcoin, the fact that from a increase in value perspective, you are entirely dependent on the capital appreciation of the asset, right? That's where I think that you have an intersection between the utility yield of holding and the financial yield of holding. But
Yeah.
that the latter, so the former is very stable because you put your Bitcoin in cold storage. And this is one of the beautiful aspects of Bitcoin. You can just forget about it. You just walk away
Yeah.
and you don't even have to keep a node running, right? You can just keep it in deep cold storage. You can even back it up on a metal plate. Have it be fireproof. Do multi-sig, whatever you want to do, but then you don't have to touch it, and you don't. If you put cash in a bank account and you leave it alone, the bank will actually take it. They'll close your
Yeah.
account and they'll take it, and then they'll give it to the state as
Yeah.
unclaimed property.
That happened to me actually, believe it or not. I mean, a small
It's
amount,
happened to
but
me
yeah.
too. Yeah,
Yeah.
yeah.
To kind of head back to the business part of it. I had a couple questions so I have a small company that's it's a lighting distributor. So we usually don't deal with smaller amounts. Like we don't do, usually it's projects. So we're looking at $1,000 north. I think I've accepted cash maybe 5 times, just because everybody's so used to like tap and pay or Zelle, but it's that credit card or company check. The issue that I have is the bulk of what I sell is actual product. So there's obviously cost of goods sold as an accountant, you know. So there's a factor. So if I accept the whole sum in Bitcoin, then there's added friction in the sense that I have to sell a portion of it, generate a capital tax gain, well, gain or loss, depending on when I receive and when I sell, to then convert to dollars to then pay the vendors and then that kind of thing. I wanted your perspective or your opinion on a business because I see Bitcoin making a little bit more sense currently for service-based businesses than companies that are kind of like me that sell more products. Does that make sense or is that a little confusing?
Yeah, I think that makes sense. Yeah.
Yeah, because that's the issue that I've had. But as somebody who sells products, how would you convince, not convince, maybe that's not the right word, but how would you do it, I guess is or how would you think about it?
Yeah, I think that when we approach Bitcoin adoption, we have to stay focused on solving real problems. And so if somebody's top line revenue, their operating cash inflow into their bank account, if that's working well and it's not a problem, then I don't think that they should change it. So, on the other hand, if they feel like their balance sheet is not working well, uh, then then they can fix that with Bitcoin. And so it's like it's very situation specific, where you might have somebody who's doing international type activities where there's a lot of friction on currency exchange, and it would solve a problem to use Bitcoin. Um, but I think that if we try to use Bitcoin as a solution to fix things that are not broken, then we kind of exhaust ourselves and our energy, and we should conserve that energy for areas where there are real problems that Bitcoin can solve. I think it does raise the interesting question of long term, how do we get adoption for Bitcoin and payments? And I think that it comes down to the double coincidence of wants. In a
Mhm.
world where you have Bitcoin on your balance sheet, I have Bitcoin on my balance sheet, it increases the friction if we use dollars, because now one of us has to convert to dollars,
Yeah.
send the dollars, and then the other one has to convert back to Bitcoin. So if we're both on the Bitcoin standard, then we can trade in Bitcoin and just use the dollar as a unit of account rather than a medium of exchange or a store of value. And then longer term, if Bitcoin really goes to 100% adoption, then you would use it as a unit of account for transactions.
I've been thinking of how to do or how one could deploy a strategy like strategy for a
Mm,
very small business. Obviously, there are ways to do it, but then it's you just don't have the same access to capital that somebody like Michael Saylor or Strategy has. If I go to the to Bank of America right now and try to ask for a line of credit, I'm going to get charged at the very least 6 points or something like that. If I were to take that loan and just buy straight up Bitcoin, hold it for 4 years or longer, I should, I mean, unless something horrible happens, I should be
mhm.
up. So I've been talking to some small business owners, very few that are kind of open to the idea of holding Bitcoin. And yeah, obviously the easiest way to do it is just hold the Bitcoin. But if somebody wanted to leverage just a little bit, this it's not so obvious for a small business owner. So is there anything that you can think that might make sense for a small business owner to deploy a MicroStrategy playbook, or is just putting a small amount of your profits into your treasury, is that good enough for a small business?
So let's start by looking at why Saylor's approach works, which is that he is, first of all, has access to the public equity markets, and so he can issue his common stock, MSTR, and that it's a very liquid stock. Second, that he is able to issue convertible bonds that have a 0% interest rate, because instead of paying the bondholders with interest as cash, he pays them with a call option on MSTR shares,
Right.
and that call option has a lot of value. And so um, that's how he accomplishes a format where he's not having to sell any Bitcoin to pay cash. He's just selling common stock, right, by issuing it to in the conversion process.
Right.
Um, so for a small business, what are sources of capital where, for example, you would not have to pay the interest payments? It's very challenging. So, um, what can end up being the best approach is to say, well, I'm going to, and I'm not advising you to do this, Tony. You make your own business decisions, but I'm going to sell the equity of my company to let's say they're doing a roll up of lighting companies in this private equity firm, and I'm going to sell the equity, put that into Bitcoin for yourself, and then to just be an employee, right? And to then take the profits from being an employee and putting that
Right.
into Bitcoin. So, because at the end of the day, if you don't have, if you leverage up in a way where you're going to have to sell Bitcoin in the future, and you're doing it, you know, with your business, it could bankrupt your business,
Yeah.
and that wouldn't be a good outcome. Bitcoin being so volatile, there's a lot of uncertainty and risk around it. So I think, um, but if you're able to get, let's say, a 10-year term loan and it's interest only, and it's a fixed interest rate that's pretty low, then you can say, well, I'm going to take that risk. I'm going to arbitrage between Bitcoin's long-term returns and the cost of capital here. Um, and that's, you might even have a strong cash flowing business that will allow you to make those interest payments without having to worry about the solvency or the liquidity of the business.
Do you believe in I believe there are LBEs nowadays, that what they're calling them, leverage Bitcoin equities. That's a cool little term. Do you think that MicroStrategy, being the biggest player with the most time in the game, the most trust, and it's hard to say trust because it's, some of these other players like Metaplanet and 21 Capital with Jack Mallers, I'm not going to say they're not trustworthy. It's just that they
Track
don't have the
record.
same time. Yeah, they don't have the same track record as
Yeah.
MicroStrategy. Do you think MicroStrategy is just too far ahead?
Mm. Um, so in some ways, yes, because as you point out, they have a huge first mover advantage. In other ways, there are different parts of the capital market that are not necessarily um, uh, opportunities for MicroStrategy, but might be opportunities for other leveraged Bitcoin equities. And so you brought up Metaplanet. They're in Japan, and um, there. I think the opportunity was that the Japanese retail investors, they all have, some of them have several brokerage accounts right on their mobile phone, but they have had a hard time accessing, let's call it, crypto exchanges, because of what happened with Mt. Gox and the regulations that followed up on that. And so then leverage Bitcoin equity can become a proxy for Bitcoin exposure, on top of the fact that there's different tax treatment between
Exactly.
equities
Yeah.
and commodities in different jurisdictions, and that I think the other part of it is that it's it might be easier to earn a high BTC yield when you're smaller, and that it has diminishing marginal returns as
Of
you
course.
grow. Um, so the other part might also just be about relationships and execution. So, um, are there pools of capital where they look at MSTR and they say, we're very excited about what Michael Saylor's doing, but from an economic perspective, we'd like to be in a different position than just an MSTR common stock shareholder, or it's not. So they might have the view that they have a lot of capital to deploy, and rather than being a customer of Strategy's capital structure, they want to create a new capital structure that they can design for themselves and capture the most of the economics of it. And so um, that's why I don't think it's a winner take all. But we can't understate the massive advantage that Saylor has and the moat he has
Yeah.
because of the economies of scale he has. I think that he's going to be able to access other parts of the capital markets that smaller players won't be able to until they grow into that size. And so, um, yeah, it does. I also want to add on the derivatives. It's interesting to see that on MSTR there is a very liquid options market,
Yeah.
and we've seen then uh, ETPs build yield products on top of the options with strategies to monetize the volatility because as a leveraged Bitcoin equity, MSTR has the volatility of Bitcoin amplified by the leverage. And so that creates interesting uh, uh, volatility harvesting opportunities with MSTY and IMST. And all of
Yeah.
this, not financial advice. Definitely, work with a financial advisor before you degen into all of these different ticker symbols, because they do have a very separate set of risk return profiles than spot Bitcoin as a commodity, um,
Yeah.
and different regulatory environments, and but I find it fascinating because for the past decade, everybody has been saying Bitcoin is too volatile, and especially on Wall Street, right? Wall Street investment banks might have had the view of blockchain, not Bitcoin, because
Yeah.
Bitcoin is too volatile. And to change the opportunity, or sorry, to change the challenge into an opportunity and to say, well, we can actually profit off of the volatility instead of just complaining about it. I think that's a mindset shift for the whole market.
I think so too. Yeah, it's funny how volatility has always been frowned upon and people confuse volatility with risk. I've always found that interesting because if you just superficially look at it, it's understandable how somebody would correlate those, but they're not. It's different. I think Howard Marks has a great article or a blog post about that. Risk is not volatility. So yeah, I agree with that. I remember somebody, and it could have been you, that said Bitcoin, since Bitcoin has a fixed supply, the price is volatile, whereas the dollar is the other
Yep.
way around.
Yep.
So that I remember when I heard that, I was like, oh my God, of course, like the price is fixed on the dollar, but that's why they can print or they have to print to kind of make up for it. Or at least that's the way I understood it. Is that accurate or am I misunderstanding that part of it?
Yeah, that is accurate. I mean, the way they stabilize the dollar is by printing dollars. Very rarely do they stabilize it by destroying dollars.
Yeah, that's true, right?
Um,
That's not.
and that it's um, it's also, we can also contrast it with gold, where if the price of gold goes up, there are more gold deposits that are economical for gold miners to extract. And so if you look at the gold production, it increases with the gold price. That's impossible with Bitcoin. So with Bitcoin, you have the production get cut in half every 4 years, and
Right.
that the Bitcoin miners, they can't do anything about that because that's enforced by the Bitcoin nodes, the software
Yeah.
side. Um, and in the shorter term, every 2 weeks there's a difficulty adjustment, so they can't accelerate the rate at which they are mining Bitcoin and adding it to the ledger. So when the Bitcoin price goes up, there's no offsetting increase in supply that can um, absorb that new demand. It all just goes into the price,
Yeah.
which is the cause of that volatility and of NGU, right? Number go up technology. But it's hard, I think, for a lot of people to wrap their minds around the fact that Bitcoin's scarcity is absolutely finite. there will only ever be 21 million Bitcoin.
Yeah.
And that's not true of any other asset that we're familiar
It's
with.
mind blowing.
Yeah.
So I've had that conversation with a lot of people. My brother-in-law,
Yeah.
I don't like to kind of like beat these things on people, but every once in a while the topic will come up and I just jump on it. So I just blabber away. And I remember this last time. So every bull run, the conversation comes up. That's when I know things are kind of starting to heat up because a couple of months ago I started getting the phone calls and they're like, "Hey, can you tell me more about that Bitcoin stuff?" And he was with one of his work buddies who was into all kinds of crypto and this and that. I've been there before, and I'm not going to say you can't make money because you can. It's basically like going to like this giant casino and can you get lucky? Yeah. And there's people that can probably time it, but if you want to keep it simple, just go Bitcoin and that's it. And then I was laying out some of the main points while I was like on a speakerphone conference call with his coworkers. And when I said that you cannot make more Bitcoin. There's only going to be 21 million, and everybody kept interrupting. And they're like, but they can just copy the code and clone the code or change the code. I was like, you can't. You can. It's built into the code. Like you can modify that part of the code. It's part of the protocol. And I think somebody posted recently that there's going to be X amount of Bitcoin mined this year, and already in the first quarter, 80%, give or take, of the supply of this year has already been accounted for. Moving on to one of the last questions before I go to the what my family is excited about because they have some questions for you. They're short though. I wanted your take on the Bitcoin Core versus knots. Is there
Yeah.
like a way you can digest this for normies to kind of understand the difference between Bitcoin Core, knots, and how that's kind of linked to this whole op return discussion that's going on? Because it sounds
So,
like from an outside perspective,
yeah.
it's kind of sounding a little bit of like the block size war. I don't think it's
Uh,
as nowhere near as
yeah, it
bad.
might sound that way. I think it's materially different. So if we look at the motivation for using op return, it's this idea that um, if we increase Bitcoin's utility, then we can increase its value. And I'm very skeptical of that narrative. I think that Bitcoin's value really comes from the three existing features that you can create a private key, generate an address, receive Bitcoin. One.
Yeah,
Two, you can hold Bitcoin over time. And three, you can take somebody else's address, craft a transaction, and send Bitcoin. And so receive, hold, send. I think that for a monetary asset, that's all you need, plus the scarcity, the permissionless, decentralized nature of it, right? So that is my baseline case for Bitcoin's value. To say that, well, it can also be a data availability layer for ZK rollups that are trading tokens and executing smart contracts on the EVM. My eyes glaze over and they roll back into my head, and I have a brain aneurysm from hearing that.
yeah,
That is to me um, already debunked by a natural experiment that we call Ethereum, and uh, so it's already empirically false, and we don't need to beat a dead horse. Having said that, there are people who are not, I think, as um, they think about it differently. Okay, let's put it that way. And
yeah.
they are stubborn. Okay, so what are the negative consequences of them using Bitcoin? Because again, it's permissionless. So, and we can get into the nuances there, but um, of using Bitcoin's base layer for their utility, the negative externality is on node operators. So node operators now they have to pay for their hard drive space, right? But they don't receive any revenue.
Right.
And so if at the extreme, if we did not have a block size limit, that would be a huge problem because then Bitcoin would become very centralized. Only Google, Amazon, Microsoft, Apple
Yeah.
would have the data
It's
center.
almost like XRP, right? I think XRP has like this insane kind of like there's
Yeah,
only a few nodes that can be run.
examples of that. And so it would make it so that they set the protocol rules and we're back to square one, right?
Yeah.
Except instead of the banks, we have big tech that is. So um, it's very important for us to be sensitive to the cost of running a Bitcoin node. Now, that cost currently is constrained by a combination of consensus limits. So you have the block size limit of 4 million weight units. You have signature operation limits. Um, and that I think that that's great. Then on top of that, you have policy. So this is not consensus. It's you know, policy that is changeable by the software developers and by the node operators, where it wouldn't get rejected if a block violated a policy, but it's just seen as a way of mitigating denial of service attacks and things like that, and mitigating. Historically, it's been seen as a way to prevent spam. So this is where we get into controversy of the
Yeah.
utility guys. They'd say it's not spam, it's utility. The monetary guys would say, is it utility? It looks like spam to us, right?
Yeah.
So then we get dragged into a subjectivist argument.
Yeah.
Now, I would say at this point that uh, the cost of running a Bitcoin is already constrained. And so I think that the downside risk is already mitigated. And I'm not worried about the utility people stuffing the blockchain with their spam, because I think that, first of all, it can be pruned. So you can prune
That's true.
witness data for those who are doing inscriptions in their spends, and you can prune UTXOs that are op return, and so I think that the technical debate around op return is really a proxy war for the cultural debate about what is the value of Bitcoin and how should we build on top of Bitcoin. Historically, the way we think about building on top of Bitcoin is using the chain as little as possible. And that is the philosophy behind Lightning of let's move everything off chain. And the ZK rollup approach is not that. It is, let's use blockchain data as kind of a storage mechanism, and
Yeah.
with other things on top of it. But it's so I think that that's why there's so much acrimony. Would I advise people to use one piece of software over another? Well, I would say that you can use both. So
That's true.
you
Yeah.
can run Knots, you can run Bitcoin Core as well. If there is a consensus split, I think that's something that we have to take very seriously and be really thoughtful about, because that could cost a lot of people a lot of money.
Yeah. I agree. I'm, so a couple months back, I know that Saylor got Michael Saylor. I say Saylor like I know him because I've seen so many videos. I'm like Saylor like he's
The
my
people
buddy.
who know him call him Mike.
There, well, yeah, that makes sense.
So
It's yeah, that's true. I did see. I think Eric Weiss. He's like
yeah,
Mike. It's like who the heck is Mike?
yeah. I don't call him
um,
Mike. I call him Mr. Sailor.
Mr. Saylor, I know. So there was his. So he was. I guess I don't know if he was pushing for it, but he was basically stating the case for kind of ossifying Bitcoin. And to me, it really makes sense. It really does make sense because you wanna. It's gotten to the point where it's so valuable, it's so important to so many people that any little mistake can screw it up. The database gets all messed up. So I can only imagine something. Well, the latest thing that happened, which was kind of like an unintended consequence, I believe, and maybe you can correct me, was Taproot. So I think Taproot enabled the ordinals, if I understand that correctly.
Sort of. It made inscriptions less expensive. Ordinals existed from day zero in the sense that it's just a way of serializing sats, outside of Bitcoin's consensus layer and kind of just having something on
So
top of
Taproot just made it cheaper to do.
what Taproot did was it made it cheaper to add data in the on the blockchain, right? But it didn't. It's not the first time people have put data on the blockchain.
Yeah.
It's just by happenstance, unintentionally made it cheaper, but also kind of intentionally in the sense that there could be future on-chain smart contracts that require more data in order to accomplish what they want, just outside of putting JPEGs and ZK rollup data on there.
Yeah. Yeah, I'm for I definitely want, it needs to be maintained. If there's any kind of software or bug or
Yeah,
anything like that, that obviously has to be
yeah.
resolved. I just lean more towards, I definitely lean more towards ossification camp. I just think that if we don't need to, like, what more do we need from Bitcoin?
I
Is my point of
so
view.
I'm radically opposed to ossification. I see that as essentially um, uh, surrendering the idea that we can improve Bitcoin. And it's just contrary to the open source ethos. What I do think, though, is that we have to be very careful about what we do with Bitcoin's consensus rules and with the software that implements those rules. Um, so I don't think that SegWit and Taproot were mistakes. And I think that there will continue to be opportunities to make it easier, cheaper, faster, or whatever it is
More
of
private.
receiving, holding, and spending Bitcoin. And so, um, part of it's like we don't know what we don't know, right? Like somebody could drop a white paper next week that is such an obvious improvement that it doesn't have any negative trade-offs, and everybody's like, yeah, obviously we need to adopt that new opcode. And so it throws out like to me to say that we're going to not make that obvious improvement because we've decided to ossify and we don't want to invest any time in reviewing a change to Bitcoin. I think that that's not constructive. But that at the same time, if there's a change where it's like, well, it's a little bit better, but it introduces some risk, then it's like, okay, well, why? That doesn't meet a
Yeah.
threshold of materiality where we should FOMO into it.
Yeah. No, I definitely agree with that. The one thing that to me, even though right now I know it's not a problem, the quantum resistance.
Yeah.
So if they do implement some of this,
Yep.
so the Satoshi coins
Yep.
might be at risk
Yep.
because those either can't be upgraded or they would have to move, and obviously they're not going to move. And
That's
if
right.
it does, well, not
Yep.
that it makes a big difference. But if you were able to fix the quantum issue, if you were able to implement quantum resistance and
Yeah.
still protect those old coins, then it's like a win-win for everyone. Okay, to respect your time, I just wanted to give you some rapid fire. What's the easiest way to ensure a partner can reach the coins if the techie is gone?
Yeah. Wow.
Yeah, so
Well,
I thought it was going to be rapid fire, but she kind of,
yeah, the flippant answer would be like a Bitcoin ETF, right? So that you're like the beneficiary on the account, and that makes it easy. There's Yeah, it's not a product I've worked on, so I don't have strong opinions there. There are products out there and companies like Unchained and that might be able to help with that.
Is Bitcoin really money? This comes from Enzo.
Yes.
Can uh, can you buy a house with Bitcoin?
Well, even if you can't do it directly, you can do it indirectly by converting it to dollars and then spending the dollars on a house. So I actually think that that's like that goes back to our question about, would it solve a real problem to buy a house directly with Bitcoin? If
Yeah.
the other person just wants dollars, then not really.
Is government money always bad?
Yeah, that's a good question. It does seem that way. Yeah. But it also, it's we have to keep in mind that it solves a lot of people's problems too.
It does, yeah. Okay, so this one's from Lucas. Will 21 million coins ever run out?
No, because of the divisibility, right? So you got 2.1 quadrillion satoshis.
Yeah, I usually tell them it's like the idea of the pie
Yep,
or a pizza and
yep.
just being able to slice it, which a lot of people still have problems kind of like, you
It's
know,
hard.
arguing, yeah. Um, can CBDCs track everything we do?
Yes.
And the last one, which I gotta ask him, what his intentions are, but any legal ways to reduce or eliminate taxes, and can Bitcoin help?
Um, well, I think that if you buy and hold Bitcoin, you do not incur a tax liability from those two actions. And so just I think that it's on you to keep holding and to not realize any capital gains. That way you don't pay any taxes.
Perfect. Pierre, thank you so much for your time. I know
Yep.
we went
Thank
over
you.
that hour, so thank you so
All right.
much. Sorry for harassing you so much.
No worries. Have a
I
great day.
wanted to just thank you so much, and hopefully we'll talk soon.
Thank you, Tony. Bye.
Thank you. Bye bye.